Well, let's say I'm an entrepreneur. I make plenty money, but I haven't been filing my taxes correctly. Do I have any options to invest in real estate then?
Yeah, absolutely. We can do a DSCR loan. You just need the 20% down. We don't look at income. We don't look at tax returns.
Wow.
We don't look at your debt. You could have so much debt, they don't care.
Tap in, Money Talk Mondays. Let's go. Money Talk Mondays. It's your host, D-Saul, with another episode of the Money Talk Mondays podcast, where we talk about all things money. We talk about real estate. We talk about credit building. We talk about stocks. We talk about all things when it comes to making money. And where I grew up at, there wasn't really much conversation in our households about real estate, especially not investing. All we knew was you had a place to stay in, you lived there, and then and that's pretty much it. We didn't have any idea about building equity. We didn't have any idea about buying properties to create wealth. And today I got someone on the show that's going to teach y'all how to invest real estate, right? Show you some of the most popular methods that we use for real estate, some of the ways that you can get into real estate today, right? You can use your home, or you can go and get some of these creative financing ways that Steven is going to talk about today. Without further ado, my man, what's going on, bro?
What's up? How y'all doing today?
I'm glad you're here. Glad you're able to join. Finally, we've been talking about this a minute.
Yep.
Welcome to the Money Talk Mondays podcast, bro.
Absolutely, man. Happy to be here.
Soon as Steven got into business, he reached out to me on Facebook, wasn't it?
Yeah. Facebook might actually have been Instagram. I think 4 or 5 years ago.
Yep.
And it's been just communication ever since. And I'm excited to actually get on a podcast and kind of talk about some stuff with you.
Oh, yeah, man. I can appreciate your post a lot, man. I know when I first saw you, I saw how hungry you was, how you was just eager to just get in the game. And most recently, you've been having a lot of posts about DSCR loans, bank statement loans. I'm like, yeah, man, I got to get him on the podcast. We got to talk about this because a lot of my people really want to know how they can utilize all of these different products out here to start investing in real estate. This episode was brought to you guys by Credit Repair Hacks. Credit Repair Hacks is one of the world's first AI digital credit repair softwares. You're able to repair your credit directly from your phone. The system will detect any account that's negative, write a full dispute letter based on the items that's on your credit report, all from your phone. If you use my link, guys, you can get this for $29 a month. I'll leave that in the show description. Bro, man, what's been going on in your world, man? I've been seeing you super excited about the kiddo. You just had a daughter, is that right?
Yep.
How's life, man? What's been going on?
Oh, man, it's been great. Father life is exhausting, but it's worth every second of it, man. It's such a blessing. She's growing up quick. Everybody told me it would happen, and I didn't listen. It's happening quick.
I know you had said a lot of people warned you and told you. What were some of those things? I'm just curious because it takes me back, because I remember when my daughter was first born, how I felt and just all of the different emotions that were going through a young father's head at the time. What was your experience like with that?
It was, I mean, it's still kind of eye-opening for me. Every day is something new, but the biggest thing was people just being like, don't put work before your kids. Don't put work before your family. And before having a kid, it was like, that was my whole world was work. You know, me and my wife works full time. We both love work. That's, we're very prideful in our work. So having a kid was like, this is now our full-time job, and work is second. Gotcha. And so it's a different dynamic, it's like you're taking care of this life.
Yeah.
It's crazy.
It is, man. And I mean, it's funny. Yesterday, I just went to my daughter's first softball game. She's on the JV team.
That's awesome.
She's 15, bro, in high school. So the whole reason I'm telling you her age and what grade she's in right now is to cherish these times right now. Yep. I'm telling you, bro. They always get more and more adorable as they get older. That's never going to stop happening. But the innocence of them right now, like, it's not going to be like that. Once they start growing up, maturing in age, man, you're going to start seeing personality. You're going to start seeing those emotional mood swings, just like with your wife or your woman. You're going to start experiencing that because we have a different bond. We have a different relationship with our daughters because, that's precious to us. That his home is different from a son. When you got a son, you'll be a little rough with him. You want him to kind of, have a little edge to him a little bit. With a daughter, we want to be so careful. We want to be so particular. And I don't know, man, it's a real good
God
feeling.
knew what he was doing. He knew I needed a little girl. If it was a little boy, I'd be in for trouble.
Ah, man, hey,
But what was your favorite age through all of it?
woo, I think my favorite age probably when she got around like 6, 5, 6, 7, because now she can talk back to me. She
Yeah,
can tell me what she want. She's not super feisty yet.
kind of
Uh,
discovering what she likes. You
yeah, and
know,
she was just all over daddy, like
that's awesome.
hugging me all the time. I
Yep.
love you, and just so innocent. Like I'm saying,
Yeah.
nowadays, man, you'll be lucky to you'll be lucky because they growing older, they're going through the puberty. Like my daughter now, one time I had a Gatorade or something, and she wanted some. And because I opened it and took a sip first, she didn't want it anymore. I'm like, just 3 years ago, you would drink anything after me. But now I guess the
Yep.
world has told you can't drink after your daddy no more. So it's little stuff like that. It's all fun.
Yeah.
But little stuff like that changes as they get older, man. I miss that all over me feeling. You know what I'm saying? When she see daddy is, I mean, she still do that, but back then it was different.
Time to have another one, I guess.
Ooh. Well, look, we're gonna hop into this episode, and if I can get some more investing strategies from you and get some more money coming in, yeah, we'll talk about having
Maybe
another
so.
one.
Huh? But everything's been good, man. We've been actually opening up a lot of new products in the mortgage industry, fix and flips, bank statement loans, DSCR. So a lot of good stuff for investors specifically, as opposed to like just someone who's trying to purchase their first home.
Yeah.
But we also have great products for that as well. So we've kind of really broken off and opened up the broker division, because that's kind of, so we as Reliant Mortgage are a direct lender. So we fund our own loans and sell them to investors, but we also work with investors that we fund off of our line. They fund for those non-QM bank statement loans, the DSCR, to make sure we offer everything.
Got you, got you. Tell me a little bit more about the market right now. Like, what's going on over here in the North Shore? How are rates looking? What are you seeing in the real estate world?
Yeah, absolutely. I'm seeing the market start to pick up a little bit more after Mardi Gras, New Year's, all the holidays. And with that, rates have kind of stopped dipping. Not necessarily shooting up or anything, but we're not seeing that rate decline like we were just, about a month ago. So rates are kind of staying where they're at. We've seen a slight uptick, but nothing crazy. And there's so many different variables when it comes to what your interest rate is. So if you're looking to get a good quote of where rates are at for you today, give me a call. We can get you quoted up.
Yeah. So how you feel, man? I always love having the conversations with other people about rates. There's so many people waiting on rates to do something. How do you feel about the whole interest rates are too high, I'm gonna wait until they go low? What's your take on that?
I mean, I definitely do not advise you purchasing a house and getting into a mortgage you can't afford.
Absolutely.
Do not do that.
Absolutely.
But if you can afford that monthly payment and it's just too much for what you were anticipating, I would definitely advise you to, just think of your different options. Are you renting? What does it look like for you to buy? How much is it going to be a down payment? How much more a month is it than rent? There's a few different things that go into it, but I personally, me and my wife just had a baby. And so moving is on our agenda for the year. So that's, there's certain people, there's certain scenarios where rate should not affect you moving.
Right.
We need more square footage. We need more house. We have a kid. We want another kid. I have to get a new house. The rate isn't going to affect that.
Right.
I can always refinance. I can always build equity. I can sell my house. There's plenty of things you can do.
Right.
So don't let the fear of a rate stop you from buying a house.
Absolutely. Absolutely. And I love how you mentioned all of the parameters that actually matter towards, am I going to purchase? Can I afford it, first of all? Right?
Yep.
All of these things matter towards your move. You waiting on the interest rates really shouldn't matter. Now, if you can't afford it based on the interest rates right now, don't buy. I'm not saying that. What I'm saying is, what if interest rates do not drop and that's the determining factor on you buying a new property right now? Or you moving your family into a better home, upgrade your home? Interest rates may not never drop. Who's to say that the rates now won't be the low that they've been, the next 10 years, right? Well, rates right now, we're in the mid 6s.
Yeah, about sixes to sevens.
Sixes and sevens. What if the interest rates from now on be 8, 9, 10% going forward? You would have wished that you bought
Yep.
when it was in the sixes and sevens. That's my point, right? Nobody knows when interest rates gonna drop, if interest rates are gonna drop. All you know is, can I afford right now? Do I need to move right now? If you check those boxes, then you should move. You can always refinance. You can always get some other type of financing if the one that you have doesn't serve you. So I like how you said that, because a lot of people are waiting on rates to drop and you just really don't know. And the thing is, once rates do drop now, right, like we experienced in 2020 and 2021, everybody is going to be buying now. So now you're competing with the masses. And the likelihood of you getting a good deal or you getting a seller to pay your closing costs or any of that goes out the way, because why would a seller make those negotiations with you when they have so many different buyers trying to buy that same property, all because the interest rates have dropped and so many more buyers have flooded the market?
I agree. I agree. And I think the best way for me to put this is, when you're purchasing a home, it cannot be an emotional decision. And fear is an emotion. So
Yeah.
like that's something you need to take out of it. You can't buy in fear of, oh well, when rates drop, it's gonna be a feeding frenzy. And you can't buy in fear of, oh well, what if rates drop and I'm stuck at this high interest rate?
Yeah.
You have to buy with like financial logic and throw all the emotions out the window and just look at it logic.
Yeah, just look at it logically. Does it make sense for me? Does it make sense for me and my family?
Yep.
And as you said, you and your wife wants to upgrade. Y'all want bigger space. Y'all just had a kid. Those are the dynamics that matter when it comes to, should I buy or not, right? Do I
Yep.
have the money? Can I afford this? And does it make sense for me? Don't worry about the interest rates. They're going to do what they do. You know
Yep.
what I mean? All right, next, man, I want to kind of dive into some of the most popular things to do when it comes to investing, like methods that you can take, things that, you know, people throw out. They throw those terms out there: fix and flip, buy and hold, all of these different terms. So I want to talk about that. But before we begin, we're going to have the Money Talk word of the day. And today the word is asset. Let's see what the internet has to say about asset. It says a useful or valuable thing, person, or quality, right? So let's talk about assets, Stephen. When you hear the word asset, I know we know the financial terminology behind it. We'll get to that. But when you hear the word asset, what immediately comes to mind?
Asset to me is something that's benefiting or profiting to me.
Yeah.
So relationships, tools, different lenders I can send business to, those are all assets, in my opinion, that help bring value to me.
Exactly. Yep, that's exactly right. When I think about the word asset, I think about bringing more value, adding value, right? When I buy a house, right,
Yep.
that's adding value because of the equity over the long term, right? If I have a very good friend, that's an asset because, you know, maybe they're motivating or inspiring me in certain ways, right? Anything that brings value into your life. And as we talk about the actual, I guess, the monetary definition of asset, an asset is anything that's pretty much bringing you money in, right? Bringing you liquid cash. That's why real estate is one of the best assets. You got things like money, actual checking accounts and savings accounts. Those are assets because that's money that you can go spend. A lot of people will probably disagree with me, but in 2024 it's a little different because a car actually can be an asset. Yes, it does lose value when you drive it off the lot, but nowadays you can use a Turo and rent out your car. Let's say you don't want to work this weekend. You just want to rent out your car. Now you can put your car on the road and charge whatever it is that you want to charge to bring in money. So anything that you have that you could exchange for goods, anything that I could give or have, and it's going to bring me more value is considered an asset.
Yep.
And that was your Money Talk word of the day. So, all right, man, you know, everybody want to be a TikTok star, right? Everybody throw out these terms, but people don't know what they mean, right? One of the most popular things I hear people saying are things like fix and flip, house hacking, the Burr method. So let's talk a little bit about that for my new investors out there who want to know what these different terms mean. Fix and flip, it's kind of what it's saying, right? You're going to find a property, preferably low value, right? Get it undervalued, put the work in, fix it, and then you flip it for a profit. So you're going to put the work, you're going to renovate the house, and then you're going to sell it for the aftermarket value or the after repair value and collect the profit. In your experience, when you think about investing, right, you got the term fixing, flip, or buy and hold. So let's talk about buy and hold. Can you explain to my audience what buy and hold means?
Yeah, absolutely. So whether or not you are purchasing that home at first as a primary residence or an investment, you're purchasing that property. You are sometimes going to fix it up, renovate it, and then you're going to rent it out. So you're going to buy these properties, hold on to them, and rent them out.
Yeah. So in a general sense, the two things that you would do in real estate are pretty much you're either fixing and flipping. So that encompasses you getting a lump sum payment at the end of the deal, or you buying and holding it in which you're buying and you're not selling it right off. Hold just means you're going to keep the property, right? Whether you're waiting on equity or you're just going to rent it out and get some cash flow coming in. That's actually my favorite part. What about you? You prefer fix and flip or?
It totally depends on the
Yeah.
property. If you got a property that you're saying you can get, at a low value, needs to be renovated, you could fix it up and make a good return on it, might be worth it.
Yeah.
But also you could fix, flip it, like we said, fix, renovate, refinance, pull your equity out and hold on to it.
Yeah.
And rent it out. So a couple different, I think I'd personally want to rent. I want to build an empire of rental properties.
Yeah. So the fix and flips are good. The strategies that I give for the first time investors is, hey, if you want just a bunch of capital at first, right? Do a fix and flip first, right? Do something you're comfortable. You got cash already because you're going to need cash or a hard money lender. We're going to talk about that in a second, but you're going to need cash up front for these fix and flips because you're not going to get a mortgage on a property that has several issues and need ton of repairs. It's going to be difficult getting a mortgage that way. So a lot of times you're going to need cash or you're going to be either paying 20% down, is that right, for a conventional loan?
Yep.
If you want that. So fix and flip is cool to get that lump sum, right? But the name of the game is creating generational wealth. Buy a property and you can eat twice, right, doing a buy and hold, right? Because you're getting a property, right? You're going to get rent and cash flow coming in. It's going to pay you every month. And then real estate appreciates in value. So while you're getting that rent every month, and you can always increase your rent every year, right? It's steady building equity over time. So you can actually have this property for 15, 20 years. And after 20 years, now you can, technically you fixed it, you've been getting rent from it. Now you can flip it and get the profit. Now you can sell and get the money out after you've already been getting cash flow from it for 20 years every single month. Now you sell it, and maybe it's $100,000 more now, right? You got $100,000 in equity now. So now this property that I bought for $100,000 paid me $1,000 cash flow every month for 20 years, and now I get to sell it and get $200,000 out of it in equity. So that's my favorite. I love doing buy and hold, getting a property, getting rent in it. You add so many of those doors up. Now you're looking at replacing your income, replacing your job, because now you have rent and cash flow coming in, you no longer need a job. So let's talk about some of the methods that people use, like house hacking and the Burr method. Let's talk about house hacking because that's one of the more popular things right now. And house hacking, essentially what you're doing is you're staying in the property, or you have a tenant in the other unit that's paying your mortgage. You're almost living rent free, or you living with a reduced mortgage. Talk to me about house hacking and how does that work?
For sure. So before 2024 and 2023, FHA was your only option to purchase a multi-unit home with 3.5 or minimum amount down.
Okay.
So you could purchase as long as you're living in one unit as a primary, you could rent out up to 4 units. I mean, a 4-unit property, you could rent out the other 3 for only 3.5% down. Yeah. So in that situation, it's probably covering your mortgage and actually paying you a little bit.
Yeah.
And you also have the idea of, hey, look, I can buy a single family home, live in it for a year, save up another 3.5%, 5%, purchase another home and rent this one out. So you can continuously do that over and over again. Just save up your 5%, save up your 5%, save up your 5%, and just continuously buy a new single family home.
Yep. House hacking, y'all. I'm telling you, you're staying in this property, and getting rent out of it. Somebody's paying your mortgage while you're saving up for the next property. Okay, let's break it down. So I buy one property, FHA, I pay 3.5% down. Right now, I take that property, I go stay in it, let the tenant pay the mortgage, right? Let's say it's a double, a duplex. It's 2 unit. I'm staying in 1 unit and I have a tenant in the other unit that's paying me rent, right? That rent should cover your mortgage or get pretty close to it. So essentially, you're living rent free. You stay there for a year while you save up another 3.5 or whatever 5% down payment for your next property. Okay. You get that down payment, you get that money, you move out of that property, put another tenant in there. Now you have 2 rents for one property. You go buy another property and do it all over again as long as you like until you have the amount of doors that you want. This is a real thing. People are house hacking, using an FHA loan, using the new conventional 5% loan.
Yep.
Right? You're paying a small percentage down, staying in it, allowing your tenant to pay your rent while you keep investing into more and more properties. That's genius, bro.
Yep.
That's genius. Another favorite of mine is the Burr method, right? What is it? Buy, renovate, rent, refinance, repeat, right? What a brilliant way to get into real estate. The whole key of the Burr method is finding a property that you can buy below value a little bit, but below what the market is suggesting that it costs, right? So you're gonna go in this thing, right? Traditional Burr method, you're gonna buy the property, right? You're gonna put the rehab costs in, so however much it costs to repair it, get it up to speed. You're gonna put a renter in there. Now that renter is gonna be paying you rent. This is pretty much so you can get refinancing done, right? The lenders love to see that you already have a tenant in there paying rent already. Okay. So now you have your tenant in there. Your tenant is paying you rent. So you're getting a little money off that, right? Now you put the work in, you're gonna go right to that bank, and that bank is gonna give you a loan, a new mortgage based off the equity or the after repair value of your property. So let's just say for easy math, you bought a property for 100,000, put 50,000 in it, right? So now you've spent 150,000 on this property, but the ARV or the after repair value is 300,000, right? So you've put in 150, but now this property is worth $300,000. To refinance it, that lender is going to give you a mortgage on that property for $300,000, right? Out of that $300,000, pay 150,000. That's going to be the cost that you put in it, and you just basically did a cash out refinance and took $150,000. That's the amount of money that you invested in it. You just got that property for free.
Yep.
All of these different investing strategies. What about how do we get these properties? How can we get financing for these properties? What products are there available?
So we actually have a new product, a fix and flip, for investors to come in. And like you were saying, when you find properties that need a little bit of fixing up, you can get a good deal on these below value. You go in, you would get the financing for the purchase of that property. You would get the construction costs covered, and you would do a 12-month balloon payment. So you're going to get in, you're going to have 12 months to renovate that property before that loan is due. You renovate, you refinance, you get into another conventional loan or a DSCR or another product, and you start renting that property out.
Yep.
You just gained equity, you just gained a tenant, all because we now have these, fix and flip products that we weren't able to offer before for investors.
Well, let's say I'm an investor, I'm an entrepreneur. I don't have my tax returns done correctly. I make plenty money, right? I make money all the time, but I don't really know or haven't been filing my taxes correctly. Can't really just show you any hard up things in terms of a consistent with my cash flow, but I got a lot of money. Do I have any options to invest in real estate then?
Yeah, absolutely. So we have two different options. So depending on your cash flow as a self-employed person, we can look at bank statements for income. So 12 to 24 months, prove that you've been self-employed with the CPA letter. Get, the calculations done and use that strictly for your income based off of bank statements. But for people whose cash flow may not be consistent over the past 12 months, and they just have a large lump of cash, maybe a settlement, maybe they got an inheritance, we can do a DSCR loan. You just need the 20% down. We don't look at income. We don't look at tax returns.
Wow.
We don't look at your debt. You could have so much debt, they don't care.
Wow.
They want 20% down. They want to make sure that the mortgage payment is covered by the projected rent. We'll get an appraisal done to make sure that the median area rent is accurate. And that's it. They want that 20% down and a 680 credit score.
Wow. And you can pretty much get funded for this real estate investment, right? Pay 20% down. They don't care about debt. They don't look at tax returns, any of that.
Nothing.
Wow. Why aren't people taking advantage of this?
I I really don't know. I think right now, um, the interest rates make it a little bit more difficult for those properties to cash flow. So interest rates and then of course insurance around here is just
Yeah.
ridiculous.
Yeah.
So
Let's say you haven't been on your job for a long time. You got a steady job. You want to start investing in real estate. What are some ways that you suggest? Like I know you got your FHA products, conventional, the new. We talked about that a little earlier. If I'm a worker and I just want to get started, right? I have no idea about real estate, investing. I got a little money. My credit is good. How can I get started being an investor?
yeah, I mean, best way FHA the multi units for sure. There's no better product out there to get the most doors for the least amount of money. If you're looking to just get into a single family house, do the house hacking in a year, and you do not own a home, USDA, it's 0% down, and you can get the sellers to pay up to 6% of the purchase price in your closing costs, which will cover just about everything. So that's one of the only loan products, if you're not a veteran, that you can get into a home for no money down at all.
Yep. And the reason why he bringing this up, y'all, I know he's saying like, but that mean I would have to stay in that home if I use an RD loan. Well, hey, here's the thing. When you buy a real estate property, period, whether that's your home that you're staying in, you are essentially becoming an investor. Because this property is building up equity and you can always move out of that property. You can save up a down payment for another home, move out of that property and start renting it out. So as long as you're buying real estate, you are being an active investor. So you can actually invest in real estate by being a homeowner. And even if you've been a homeowner for years, you can actually take out equity of your property and go buy an investment property. Let's talk about that. If you bought your house 15 years ago, after what the market did in 2020, 2021, it's a good chance you have plenty of equity in. How would someone use the equity in their homes to start investing in real estate?
Yeah, absolutely. So, one thing you don't want to do right now because rates are so high is do a cash out refinance. That's going to take away the low interest rate you currently have and replace it with this high 6 to 7% interest rate. So, we have a home equity line of credit. It's completely separate mortgage. You keep your first. This is a second mortgage that you use like a credit card. You get total funding at closing. Let's just say you want to take 50 grand out. You get your 50 grand. You could then take that 50,000 and put it back into the account or use it to pay off some debt, put it as a down payment on another house. And then as soon as that's actually paid back down, you can go and pull it again if it's within that draw period. So home equity lines of credit are great if you've got equity looking to put it into some other properties.
Right. So for the people out there that don't really understand how equity works, right? Let's say you bought your property for $100,000 15 years ago, right? And now you've got an appraisal done, and now that same property that you paid $100,000 for is now worth $300,000, right? Equity would be the difference between the two, right?
Yep.
So if you bought it for 100, now it's worth 300,000. You have $200,000 equity in that property. So what you can do with that $200,000 is things like he said. You can get a HELOC. You got high interest credit cards that you want to pay down, or if you want to take that money as a down payment to buy an investment property, you can do that.
Yep.
FHA. How could someone get the FHA loan?
So with FHA, we can put parents, grandparents, anybody who's got social security checks, anything like that, you can put them on the loan to use that as income, which I would highly recommend doing if you have a mom, an uncle, or someone that you're actually helping taking care of, which I see a lot of. These people are in the homes with you. Help them build their credit. Use that income to help get you approved for that loan.
Okay.
Now, with FHA, we do have down payment assistance programs as well. Now, if you have the 3.5% down, don't do this. Use your money, use your cash. You are going to pay for that 3.5% one way or the other. You're going to get a higher interest rate. You're going to be paying more a month. And depending on the grant that you go with, some are forgivable and some you are repaying. So depending on which way you go, the forgivables sound great. I don't ever have to pay this back, but you have to stay in the home for, X amount of years. You can't refinance if rates drop. So you're almost like locked in. So if you got 3.5%, just put it down.
Right. No, I agree. Right. And it's there for people that absolutely need it. Right. If you absolutely need it, that's what it's there for. But if you have 3.5% down, why not do that without all of the contingencies that come with these grants, come with some of these DPA programs? Now, if you need it, like I said, take it by all means. But
Yep.
if you don't have to, why?
Yep.
Right. So FHA loan is 3.5% down, right?
3.5% down. We can go down technically to a 580 with 3.5% down, and we can actually go down to a 500
Hmm.
credit score if you have 10%.
Yeah, I just did an episode, and I'll leave a link to that episode. But I just did an episode about that, how a lot of lenders market 580, and I've actually seen some deals or some of my clients get approved with a less than 600 credit score, but the chances of that happening are pretty much slim,
Yeah.
right? So while a 580 gets you in the door, I always suggest for my people to get a 620 or 640 to give yourself some wiggle room.
It's also going to help with your interest rate. So what they'll do too is you'll still be able to get approved, but they don't allow your monthly payment to go over a certain percent of your monthly income. So the
Mhm.
higher your credit score, the higher they let that percentage go.
Gotcha. Okay. And guys, you can use an FHA loan for investment properties. I think you can go up to 4 units. Is that correct?
So you have to live in the property, but it can be up to 4 units. As long as you were living in one of the units, you can use it FHA 3.5% down on a investment property that
Yeah.
you will be living in.
Yeah. So you have to owner occupy. You can use the FHA loan, only pay 3.5% down. You have to owner occupy it though. So that means you have to stay in it, right? And you can collect rent from the other units. If you go up to 4, there's 3 other cash flows that's coming in. You can also do this with a conventional loan now, and pay 5% down. But again, you have to owner occupy. Does that have a unit amount on that one as well?
No, yeah, conventional is the same. 2 to 4 units, 5% down. Now, the perks of conventional versus FHA is conventional is a lot more lenient on the house itself. Like it doesn't need to be as updated
Yeah.
as FHA. FHA is way more strict on the appraisals, but conventional is more strict on your credit score and your debt to income ratio.
Right. Gotcha. So if you got properties that kind of got it's a couple of issues. Let's say this is a perfect way you would use a conventional of FHA.
Yep.
You tried to buy a property or investment property with FHA and they denied you from their appraisal.
Yep.
Right. Go back and try to get that same property with the new conventional property. Yeah, it will be 5% down instead of 3.5, but they're a lot more lenient on the actual property, the damages and things like that. But you got to have a higher credit score. Got to be in a better financial situation to get that conventional loan.
Now, this actually just started coming up. I have a client, real estate agent of mine, who's trying to purchase his first home, and he's actually trying to purchase a 4 unit in New Orleans that needs to be fixed up. So he's wanting to go in, do a 203K, buy a 4 unit property, get the cost of the renovations included for only 3.5% down.
Yeah.
And I'll get the numbers in a second. We'll post those. But for 1 to 4 units, the loan amount changes. So if you go to 4 units, you can, I want to say it's like $900,000.
Mm.
So it's dependent upon the unit for
Gotcha.
FHA. So if you go up to 4 units, you can borrow way more money. You can renovate that property, get the appreciation and the equity from the renovation, and you're renting out the other 3 units.
Wow. That's the FHA 203K loan. I talked about it on my episode a couple of weeks ago. You pay the same 3.5% down and you can get the renovation costs included with your loan, man. That's a phenomenal way to start investing in real estate.
It's crazy.
A couple of other ways. We talked about DSCR earlier. Is that a difference from the bank statement loans that people can take?
Yeah, so the difference between the DSCR and bank statements is DSCR's no income at all. They're just wanting the down payment. It has to be an investment property, non-owner occupied.
Okay.
Bank statements can be used for either. We can use it to purchase investment properties or primary residence. And for these, we just have to prove you've been self-employed for 2 years. We actually now have a product that just needs 1 year of self-employment, but it is 25% down. So it can get done.
Cool.
With just 1 year of self-employment, which is a big thing because, you have a guy who's, let's just say, working at the plants in New Orleans for his whole life. And then he's like, hey, I want to go start a welding company. Well, as soon as he starts that welding company, we got to wait. That's a
Yeah.
time clock. Well, now with this bank statement loan, we can go and just do 1 year of bank statement loans. We don't even need to look at the tax returns. We just get the bank statements, look at the cash flow, and calculate it that way.
Wow. So is what's the credit score requirement with that one?
So if it's for a primary residence, we can go down to a 620. But like you were saying earlier, you want to at least be a 640 for these.
Okay. Okay. Down payment is that
10%
10%, right?
for
So
primary residence.
right. Okay. So can you use the bank statement loans for investment property?
Yeah, absolutely. And that's 20%.
20% down. Okay.
Yep.
So guys, you hear it. Like if you're, you got a funky financial income situation.
Yeah.
Right. Your tax returns. I know a lot of people write off everything on their taxes to avoid paying Uncle Sam, which is cool.
We don't blame you.
Which is cool. Right. You're able to use your bank statement, the money that you receive that's showing on your bank statements to purchase a new property. 620 minimum, but get around to 640, right? 10% down for primary residence. If you want investment property, 20% down. So there's plenty of options out there for anybody that want to invest in real estate. So Steven, for anybody out there that just don't know anything about real estate whatsoever, but they know they want to either buy a property or invest in a property, what advice or strategies would you give them?
The three most important things from a financial standpoint: credit score, number one. If you don't have a good credit score, you're not getting approved. It doesn't matter what your income is. Second is income. You need income to be able to qualify for what you're borrowing. And then the third is going to be assets. So don't worry so much about what you have in your account. Focus on the credit score, focus on building your income, and the assets will come and you'll be able to get that house. I'd say go check out these videos, go check out my videos, go to our Instagram and educate yourself. We don't make these videos for fun. We're making these videos for y'all. Use them. Take these tools that we're giving y'all. If you have questions, call us. We would love to explain and give you some more details.
Yep. I love that. Educate yourself. I was just having a conversation with a client yesterday, and she just had so many questions about how to get started, where to get started. And I'm like, hey, before you overwhelm yourself asking everybody, just do just some very small education, right? We live in a world where you can Google or chat GBT, right? And say how to get started in real estate. Educate yourself, right? And one of the biggest pieces of advice that I always give people is don't try to reinvent the wheel, right? People have been investing in real estate for years. You don't have to get super creative with this thing. Just look and see what people are already doing in your town, in your area, right? Someone asked me, should they get a mobile home or a standard home in their property? It's hard for me to answer that question. Just look and see what's already working in your neighborhood. How much rent are they getting right now? Are you comfortable with that? Do the same thing. You don't have to recreate anything. Just go and look and see what everybody else is doing, especially if you got a lot of cash. Go see what everybody else is doing and do what they're doing, right? You don't have to make this up. Real estate, been here for a while. It's not going anywhere. And success leaves clues. So anybody that you see that's been doing it, just follow their footsteps. See what they did. Reach out. Pay them, right, for a consultation. Pick their brain and get started. One of the biggest things that our people see is just the fear of the unknown. You got to ask yourself and tell yourself, it's going to seem scary and it's going to seem uncomfortable because you've never done it before. Like, you've never done it before, so you're not going to know how to do it, right? You're going to make mistakes. That's inevitable, right?
Yep.
So put yourself in a position to where if I do decide to invest in this, it's not going to change my life, right? Don't invest your last, right? If you got 6 months of reserves in your account, right? You got a pretty steady income, right? And you want to invest, just try it. It's okay to be scared, but don't let the fear control you. Just go ahead and start, ask questions, educate yourself. When you make the mistakes, look at it as a learning lesson because now you know what not to do the next time.
Yep. Knowledge casts out fear.
Yep. Knowledge, man. Go educate yourself. Like he said, listen to the Money Talk Mondays podcast. If you listen to the Money Talk Mondays podcast, I'm educating y'all. I always open this up to my community when I tell them I'm having a new guest to come in.
Yeah.
To do some fan questions, man. So I got a couple of questions for you, bro. The first question, if you had all the money in the world, what would you do with it?
As crazy as this sounds, if I had all the money in the world, I think I would start a church, that had nobody paid on staff. Everybody's volunteers. Nobody's getting paid. It's a church strictly off of people who just want to be there, out of volunteer work.
Wow. Okay. Okay. And is it a particular reason? Is it something that you're trying to um gather by having so many just one people in that set standing like that?
And I think for me, it's just, I love the idea of church. I don't, this is no specific church. I love all churches. I really do. I think if you're a church, you're trying to do good. But money gets in people's hearts. So if you could just remove money from it and it just be truly love,
Right.
that's it.
So you saying if you had all the money in the world, you would completely abolish money altogether. So money isn't a thing and everybody just have love and peace.
Yep.
Man, I love that.
That's my goal. You know?
love that. I love that though. I never really thought about it like, so if I had all the money in the world, I'm just cancel money altogether so people don't even have to worry about that.
Well, not so much cancel money. Quit having to be so like,
Yeah.
we need money, not so that the church isn't asking for money. The church ain't begging and doing all this and like making people feel bad about not giving. Like, hey, look, we've got it. We just want y'all to be here and be loved on.
I got you. I got you. Nah, that's dope, man. That's dope. If I had all the money in the world, I definitely would try to change the monetary system though. I would. I would try to get some good people with power together and to see how we could make money either one or two ways, right? Either more attainable for everybody, right? And it's kind of like that, but way more attainable for everybody. Or come up with some new mechanism, right? Some other currency that we go by that determines how much or how rich or how wealthy we are, right? For instance, if you got people that's out there being nice and doing good deeds all the time, they need to get rewarded from that in some kind of way.
Yeah.
So I would be trying to pay for or come up with this new system that rewards people for the good deeds that they do. You know, opening up the door for an elder lady that's walking in the stores, things like that. They should automatically get a ding, 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 cash out, new notification, some form of money received for doing the good things. That's what I would do if I had all the money. In the world.
That's awesome.
Yeah.
And then from a goofy standpoint, or you know, less serious, I think I would like, if I had all the money in the world, move to Antarctica and like colonize it.
Heck yeah. I say it all the time, man. I want for a long time it was a fantasy in my head, but the more wiser I get, I realize how what I'm gonna do is it's not a fantasy anymore. I'm gonna move somewhere off the grid, right? I'm not saying I'm gonna be there all the time, but I want to go somewhere off the grid, and I can bring a community with me. But we have our own little world, own grocery stores, own entertainment, own sports, own everything in our own world. Small community of people, like-minded, all about peace and love, right? Nobody trying to get over on the other person. Very small neighborhood, somewhere in the world. I don't even know where yet, but I'm gonna find it, bro.
That's the goal?
Yeah, that's the goal. That is literally the goal, real talk. And the second question, bro. Oh no, this gonna be a good one, man. I hope wifey don't get upset
she better not watch this one.
Let us know who's your favorite celebrity crush and why.
Oh, Jennifer Aniston.
Okay. For the longest, me. Let's see. For the longest, it was Megan Good. For the longest,
Megan Good. Yeah. I don't even know who that is.
You know, it's crazy. He don't know who Megan Good is. Megan Good for the longest, and then it turned into Karuchi. Then I don't know. Right now, I don't know who. I don't know who my celebrity. I don't think I have a celebrity crush right now, man. That's kind of
tough. I didn't know.
Yeah. I don't really know. I really don't know. I don't know.
It's tough. It's tough. I feel like Jennifer Aniston just said it because I couldn't think anybody.
Yeah. That is very weird that I don't have a celebrity crush at the moment.
The main actor chick from Scandal was I had a crush on her for a while. What's her name? Kerry Washington.
Kerry Washington. Okay.
Yeah.
I got you. Man, that is funny though. Like we literally see people on the internet and You know, the wildest things that we notice now we kind of crushing on them. That's actually funny. So that's cool, man. I appreciate you joining today, man. When I bring people on the show, what I like to do is I always do a gratitude session. Just to talk about things that we're grateful for. It doesn't have to necessarily be anything big or small, just anything that you want to elaborate on. Gratitude is so important because it keeps us in the present moment. It keeps us realizing things that we already have to be grateful about, to be thankful about. So I'm big on gratitude. So I wanted to open up with you, man. Is there anything in particular that you're grateful for today?
Oh man, I'm not gonna lie. Today, I'm actually super grateful for our relationship. This was awesome. This was a good time, and definitely just I'm thankful for Arena Title and Lettuce Media for putting this place together and just giving us a really cool place to come collaborate and get some good stuff out there.
Absolutely, man. No, good. I'm thank you for coming on, man. Like I
Yeah,
said, I've seen them posts. I'm like, man, I really need him to come educate my people.
for
I'm
sure.
grateful for you, bro. I'm grateful for Arena Title over here in the North Shore, right? So if I got any sellers out there that want to sell your home, please reach out to Arena Title for their title needs. And I'm just grateful for life, man. I'm grateful for the opportunity to wake up every day and to do what I love, right? On this podcast, educating millions of people about financial literacy is what I always dreamed about, and I'm doing it right now, right? So super grateful for that. Grateful just to have breath in my body. A lot of people take that for granted, man.
For sure.
As long as you got breath in your body, I look at it as God giving you another opportunity, another chance to be great. So that's what I'm grateful for today.
That's awesome, man.
Yep. Yep. Appreciate you, man.
Absolutely. Appreciate you having me on.
Let the people know where they can find you, man. What's your handles, your websites?
Yeah. Go check me out. It's the Rapalo Mortgage Team on Facebook, and on Instagram it's Steven STEVEN _ Rapalo RAPALO.
Y'all go follow him, man. If you're interested in purchasing or thinking about real estate, I'm going to leave a link in the description of this show, a direct link to his application. So you can apply, you can reach out to him. You have any questions about anything that we talked about today, reach out to Steven. I appreciate everyone for joining this episode today. I appreciate your support. I wrote a book a couple of years ago, How I Fixed My Own Credit in 6 months. A long time ago, y'all, I had got the job that I wanted, the job that I loved, and it got taken away from me because of my credit score. Man, real crazy that they offered me the job contingent on my credit check. I had no idea what credit was or anything, and I got the job snatched away from me. So what that led me to do was learn and teach myself everything it was about credit, and that's what I did. I fixed my credit in 6 months, and I put it all in the book. So I greatly appreciate if y'all support me to get a copy of my new book, How I Fix My Own Credit in 6 months. I talk about everything credit when it comes to credit building. And even if you want to repair your own credit, I put it all in that book. 10% of each copy sold goes directly to my efforts of teaching financial literacy in all the high schools in the world, y'all. I would definitely appreciate the support. I'm the host of the Money Talk Mondays podcast. I'm a realtor and I serve all 50 states. Like, share, and subscribe to this message. Until the next time, we out of here.
Y'all take it easy.
Peace.
Boss beat, boy.